Hello and welcome to the TGIF trade right here in Lagos, Nigeria, 12th of September. Let's get a check on how your money performed yesterday. We see the Nigerian equity market sustained its positive momentum through 4 consecutive sessions, with investors' wealth swelling by 804 billion naira, and that's just 4 trading days. The all-share index climbed about 1,271 points this week, and we see we did hold that 140,000 level compared to the 139,394 points that we started the week with. The rally was powered by gains in several medium, large, and capitalized stocks, including Guinness Nigeria, CAP Nigerian Exchange Group, and NCR Nigeria. Consequently, market capitalization that rose about 88.199 trillion. So definitely 190 billion added. We'll see if nothing crazy could happen today. It's going to be a positive week. What we've seen play out in 4 trading days already. So let's see what the bulls have for us for the TGIF. We'll give you updates at 1:30 for that. Then let's get some company news now. Wema Bank, they've blown past the Central Bank of Nigeria's mandated capital requirement for national commercial banks after successfully raising 150 billion naira through a rights issue. With this injection of capital, the bank's total qualifying capital now stands at 214.7 billion, comfortably above the CBN's 200 billion naira threshold, putting Wema ahead of the March 2026 deadline for recapitalization. Commenting on the milestone, Wema Bank's Managing Director and Chief Executive Officer Maruf Hosseini expressed confidence in the bank's trajectory and the trust it enjoys from stakeholders. And for earnings forecast now, Sterling Financial Holdings Company has projected a profit after tax of about 20.7 billion naira for the 4th quarter ending December 31st, 2025. The forecast shows the gross earnings of 149.3 billion, driven largely by interest income of 116.7 billion naira, alongside other income of 28.4 billion. Despite operating expenses of 67.2 billion naira and credit impairment charges of 12.4 billion, the company expects to close the period with a strong cash and bank balance of about 554 billion naira, supported by financing inflows of over 266 billion naira. So if you're a savvy investor, you look at what the companies are forecasting and you match that by what happens when the time comes and see if it was a miss or a hit. We'll definitely be looking out for that. To other news now. The Federal Competition and Consumer Protection Commission, FCCPC, says has recovered over 10 billion naira for aggrieved consumers between March and August 2025. The funds were secured through the resolution of complaints lodged across 30 sectors of the Nigerian economy: banking, fast-moving consumer goods, fintech, electricity. That topped the list of disputes, underscoring recurring issues such as unfair charges, unauthorized deductions, service failures, and billing disputes. The Commission says the intervention reflects its mandate to protect consumers and hold businesses accountable. Let's get a check on our forex center now. Oil prices are under pressure again. Brent crudes, that slipped in early trade today, $65.94 a barrel, 0.65%. WTI crude seems to be struggling to hold onto the $60 per barrel level, 0.69% down. So the Friday is looking quite wobbly there. Analysts say concerns about oversupply, weak American demand, outweighing fears of conflict-driven supply disruptions in the Middle East and Ukraine. Fresh U.S. inflation and unemployment data, that's also weighing on sentiment there, and that's why we see pressure right there in all markets. Now we see Dangote Group, they've reiterated their commitment to employee welfare and national development, pushing back against allegations of anti-union practices. The company clarified that the trade union membership remains voluntary and protected, insisting it does not interfere with workers' rights to associate with recognized unions. Highlighting its ongoing compressed natural gas truck initiative, Dangote noted that the program will create over 60,000 direct jobs and many more indirectly. Its driver, the firm said, will earn wages above the national minimum wage and enjoy comprehensive benefits, including pensions, insurance, Medicare, and housing support, underscoring its pledge to modernization, sustainability, and worker empowerment. And they also brought new prices there for ex-depot prices coming out from Dangote Refinery. So definitely keep your eyes on that one. All right, it's earnings season on the Nigerian exchange, and listed companies are taking stock. Industrial giant Dangote Cement is in the spotlight with its facts behind the numbers presentation, where the company reviewed its performance for the previous year and made optimistic projections for the years to come. Take a listen.
That is the sound of the closing gong, rung by the board of industrial giant Dangote Cement, signifying the close of trading on the floor of the Nigerian exchange on the day of its fact behind the numbers presentation. The event highlights the company's financial performance, market milestones, and plans for expansion. Highlights of the financial results for 2024 shows the company's revenue grew by 62.2% to 3.58 trillion naira. Profit before tax increased by 10.5% to 503.2 billion naira, while earnings per share rose by 12.3%. It is also a profitable year for its shareholders, as the board of Dangote Cement proposes 30 naira per share dividend, demonstrating consistent commitment to returns on investment. The group financial officer speaks about the funding mix adopted by the company.
The former one is the commercial paper type funding. As at today, I have about 200 billion worth of commercial paper being traded that is available, that you are aware of, at an interest rate of about 21%. I also have bond of about 219 billion at an interest rate of 22% on average. Those are the formal ones that you are aware of. Now, I have the informal one that has been, done by management, which has reduced the price to almost zero.
On his part, the group managing director highlights the company's strategy for growth in the years ahead.
In this year of 2025, we will be commissioning around 3 million ton capacity in Ivory Coast. Then in the next phase in 26, we are doing brownfield expansions in Cameroon, Senegal, South Africa. 27 in Nigeria, we have taken a big project of around 4.5 million tons of clinker at Itori. Again, in line with our export thing, this unit is dedicated only for exports. And that shows our confidence that we would be able to do that successfully. 2028, you will see a new plant coming up in Ethiopia.
The year 2024 was robust for Dangote Cement, but despite some economic challenges in the country, and the company says it is well positioned for more profitability and expansion across markets in Africa.
All right, Nigeria's cinema industry is at a fascinating crossroads. Despite inflation and rising costs, box office revenues are growing, with Nollywood blockbusters pulling record crowds. At the same time, global streaming platforms are competing for the same audiences, forcing cinemas to rethink pricing, content, and the overall movie-going experience. We'll explore the opportunities, challenges, and future of Nigeria's cinema industry and what it means for investors, consumers, and the creative economy. Well, join us for that now. We have Kene, of course, as a group CEO, Film House Group, joining me right here in the studio. It's great to have you, sir. Good morning.
Thank you. It's good to be here. It's good to be here.
Fantastic.
Pretty early. I forgot your popcorn. I would have.
Yeah, the popcorn would have been right here.
Grabbed you
and while you're answering the questions, I'm just,
No, but thanks for having me.
Fantastic. It's great to have you. And yeah, definitely you are the forefront of, what's playing out in the creative industry, especially when it comes to, the cinema. It's been a while. I've been to the cinema.
You're part of our problem, eh?
Yeah, I think I'm part of the problem. I'm always working. But I'm going to find time, at some point.
We'll appreciate it.
Fantastic.
We'll send you some discount vouchers.
Nice, nice. So what's happening generally in the industry? How's business, really?
Look, business is actually great, especially because there's this huge overhang from COVID. There's a general perception that consumer behavior has changed, which, frankly, we have. It would be ignorant of us to assume that it hasn't, because it has. The invent of, obviously, more adoption of streaming has been a factor. But I think that when you look at the box office specifically, to Nigeria, I think the cinema-going audience in Nigeria has been generally resilient. And that has been predominantly driven by premium content. You know, we've seen that as we have a steady flow and return of content at that premium level, we have also seen audiences react to it. And that's why, you know, I mean, if you look at this year to date, looking at last year versus this year, the box office is already up by almost 60% year on year. You know, by the end of September, we're projecting to hit the full year box office of 24 by the end of September in 25, which sets us right on track for another record year. And it would be the highest admissions growth since COVID on a year-on-year basis. And so we're seeing that whilst there is competition for content and competition for eyeballs, the cinemas are continuing to be very competitive in bringing people in and giving them that premium experience.
Right, and you know, definitely there's a cost of living crisis. You know, people are hit on, consumers are hit on every side. Yeah. You know, their incomes at this point, and inflation, currency weakness, even though we've seen stability, you know, in the FX market for a while now. Yes. We've seen ticket costs. That has gone up quite a bit. In my mind, yes, because I remember I could go to the cinema at some point, maybe buy a ticket for about maybe 3,000, maybe 2,000. Yes. At some point, I don't know how many years ago that was.
Maybe only about
that price.
2 years ago.
About 2 years ago.
Yes, about 2 years.
But now a ticket costs about maybe.
Our average ticket price is about 5,000.
5K.
Just a little bit over 5,000 when you look at the average ticket price across the market. But look,
consumers, they don't mind, right? They don't mind the price.
Look, and we have seen them vote with their pockets when it is great content. And I think that that is the work and the responsibility that we have, is to continue to curate premium content. And look, like at the end of the day, I think it's about value. I think that Nigerians are willing to pay for the things that they attribute value to. And I do think that cinemas is one of them. As long as they're not going in there to watch something that they believe is a bit maybe substandard, or that they feel like doesn't quite have the production values and the depth of the storytelling that maybe they are accustomed to, once we're able to curate that, people do respond to that. And look, I know you speak about ticket prices. It is a real thing that is happening with us, but it's happening across the entire market, and we are still below inflation generally year on year. And I think that people recognize that, you know, the cinemas are not being exploitative of their market or their audience, and that relationship is very important to the growth of people coming back.
Right. And would you say the cinemas are still as full as they used to be, you know, before now?
So look, I mean, at film
weekdays,
no, absolutely.
Weekends, what's it like?
It's always been an occupancy business. You know, very similar to hotels, right? So you can go into a hotel at 10 a.m. in the morning, or 12, you know, on a Tuesday afternoon, and the occupancy is low. But we're still very much a evening, weekend, predominantly business, right? Of course, public holidays, off-school term, all of those parts are parcel of the business. But at Film House Cinemas, you know, and I can speak to at least specifically to our locations, and we have quite a decent spread geographically. We have seen occupancy go up, you know, and a lot of it is as much the content that we are curating for our audiences, but also the service that we are delivering. You know, if you go to any of our locations, like our flagship at the IMAX, you know, generally people do get a good premium service, and they feel that it is value for money. And so that is the job that we have to ensure that we're keeping at the highest.
All right. So let's look at, you know, investor sentiments.
Yes.
You know, are investors still keen on, you know, investing in the sector at this time? Are they getting the kind of returns they were promised, or they felt they would get?
I mean, I think they are, and they should be, right? So they are in that, again, specifically to, especially on the content side of the business, you know. Yes, we have seen there's some uncertainty around the streamers over the last few years, and that maybe would have given investors a little bit of a... But we have seen generally that investors are averagely happy with the sectors and their returns from the sectors. And look, we're very realistic, you know, about the investment opportunities that exist in cinemas. The infrastructure of it all is a thing that matters to investors because it's heavily brick and mortar. But I think that the experience and the content leads, and generally, at least on our side, they are happy.
Right. So let's look at some issues, at this point, because I know there's some movies, latest releases that are supposed to be in the cinema.
Yes.
But there's some websites that you can watch the same movie for free.
Yes, laddie.
And that's growing.
I mean, that's a problem.
It's a big problem.
Yes, it's a problem. It's always been a problem. Like piracy is, it's always been a problem. And we continue to fight that, working with our stakeholders, whether that is our regulators, whether that is the government, and third-party, operators or anti-piracy agencies that can help fight that. Look, at the core of it, it's really about the education of it. I personally have maintained over the years that the primary driver of piracy is the access to content, right? It's the democratizing of the access to content. And I think that as long as we continue to have the content accessible and we're able to communicate and educate, because the vast majority of people, at least in Nigeria, who also don't even know they're breaking the law. They don't even know that this is a thing that they shouldn't be doing. I mean, if you are sat in a city somewhere in the Middle Belt that maybe doesn't have a cinema, but you want to participate, right? You want to watch the biggest and latest Nollywood film that everybody is talking about. You're going to watch it where you can access it. And if there's no cinemas there, or there are no platforms that are carrying it, the access is a huge driver of that, I think. And I think that we have to continue to work hard at ensuring that we are democratizing access to content.
So right now, it's websites, that are pirating some of this content.
Telegram.
Yeah, there's also apps doing that too.
Yes.
But before now, it was CDs.
Yes.
And I remember vividly around the early 2000s.
That's correct. That's correct.
Those 3-in-1
absolutely,
CDs.
Absolutely, in traffic.
Produced by Big Boss Jiggerman. I remember that name.
You're a bit too close.
It easier?
You're a bit too close to this. No, of course, with technology and digital, it is a lot more easier for the pirates to get access to the content. A ton of measures that are in place to protect it. And that's the beauty of cinema as well, because if you think back, content that goes through cinemas are one of the least pirated. If you really think about it, there are very few. I don't even know that you can point to one in recent times that has gone to cinema and has been pirated. So it's one of the most protected windows. Once it goes on streaming, then sometimes that's when it becomes free for all. And look, if you went back to the time that you were referring to where CDs were on the road, on the streets, the driver of it was, of course, a lot of, there was a lot of task force driving that and getting them off the streets. But what also happened was more cinemas popped up. And so it goes back to my point about the access to content, because people want to watch good content and they want to consume it in a manner that is responsible. Many a times, the responsible version of it is driven by the lack of access to it.
Right. All right, let's look at island versus mainland.
Oh.
The island seems to have most of the cinemas.
I hear.
At this point.
So I hear.
Ikeja mainland, there are not many
cinemas
here. Why is that? What's wrong with the mainland?
So look, I think like most things, well, first of all, there's nothing wrong with the mainland. Okay, we love the mainland.
We love the mainland.
Yes, and from an admissions point of view, the number one, number two cinema on most films is also on the mainland, right? So the mainland has continually demonstrated huge potentials. I think that what happened is that most of the cinemas, and like with most things, it's cultural adoption. It's where the opportunities sit. I think
the island people are more posh.
And the island, no, I would say that the island saw a very huge boost of entertainment centers and malls and mini opportunities at a very short period of time that just drove a lot of cinemas there, right? Because many times, or else it is a stand-alone cinema like the IMAX, like the Lekki IMAX. Most times they're in malls, most times they're in developments, right? So if you look at the mainland, a lot of the mid to big tier malls have cinemas, right? So it's not coming from a place of cinema operators not wanting to be on the mainland. You know, again, I can speak for Fame House. You know, we're actively looking to expand on the mainland. If you look at our journey, in fact, we started outside of Lagos, you know, before we came into Lagos, because we understood the strength of the mid-tier cities, the student university cities, and the mainland is king, man. A huge portion of the market share that you see come from the island are coming from people on the mainland that are coming over to the island. Right?
So the mainland, we have the power.
Yes,
on
and
the mainland.
I'm not sure why you are excluding me in the we, but yes, we have the power.
Yeah, we have the power.
Yes.
All right, so you did mention the malls.
Yes.
And I don't know if it's a trend, but I've tried to visit the malls, and I see they're mostly empty.
Yeah.
You know, at this time. Is that helping, you know, cinemas and the malls, or are the cinemas looking to be outside of the malls at this time?
So look, that's not helping any business in the mall. And and it's a tough time for retail generally, right? I'm not going to speak to retail and malls in development because it's not my area of expertise.
Yes, sir.
But generally in retail, it is a tough time, whether that is increased premises cost of running there, whether that is diesel and rents and FX, and you know, there are a ton of different challenges that I am fully aware that retail developers are dealing with. And as you can imagine, given where I sit, I'm interfacing with them every other day. And so I know that their pain is real, and that is a huge function of the macros that we're dealing with in Nigeria. Now, how that cascades to cinemas and cinema operators, of course, it's tough, right? Because they're the same challenges. Premises costs is a huge driver. It's almost 30% of your OPEX and that is on a good economic
That's having a
contract,
business at the mall.
Right? Absolutely, yes.
Right.
Because the rents and the premises costs and the
Service
diesels
charge.
and the service charge and the, you know, for most cinemas, they get up to 40% of your entire cost, right? And that is before you are dealing with rentals and of course paying back producers. And if you know, like us, we represent some of the studios, Disney, Warners and Sony, you know, you have to send royalties back to them. Many times that's also in FX, you know, so the economics are tough, but the opportunity is huge.
But
and
the FX story is better now. It's been great, right?
Yes, and look, right, we can all see that we would all take it lower. But I think that one of the things that I have to give credit for is there is at least it's stable, right? It's stable. It's
weak,
it's still high.
stable.
It's still weak, but it's stable.
Right.
And for most entrepreneurs, the ability to predict and our ability to have some predictability in the market is extremely useful, because at least this way we can plan, right? And so we're taking the wins where we see them. Of course, we want it to be stronger. We are going to play our parts to make that stronger. But we are grateful for the stability and predictability that comes with it. And I think that's a message that I think can probably get out a little bit more. Fantastic. Because it's not for, there's a lot of effort that I'm sure has gone into building.
Fantastic. And we hope it stays stable, you know, going forward and strengthens.
Absolutely.
you know, going forward. It was great having this conversation with you.
Yeah.
Thank you so much,
no, thank you for having me.
Group CEO, Film House Group.
Yeah.
And after this, I must watch a movie.
Listen, man, I'll look out for you, and we'll get you some popcorn.
Fantastic. Thank you so much for coming
Thank
on.
you.
Yeah, we didn't talk about popcorn costs, but I know that's gone up. You see, Nigeria's infrastructure deficit is estimated at over $100 billion, and bridging this gap requires creative financing tools beyond traditional borrowing. One of such instruments is the Sukuk Sharia-compliant bond that has already funded roads, schools, and other projects across the country. But since its first issuance in 2017, Nigeria has raised hundreds of billions of naira through Sukuk, with clear evidence of impact on transport and education. Now, the big question is, how can states and local governments tap into the Sukuk to drive development, boost infrastructure, and deepen financial inclusion in their communities? Well, let's have this conversation now with Mr. Akeem Oyewale, is the CEO, Marble Capital, joining me right here in the studio. It's great to have you, sir. Good morning.
Good morning. Pleasure meeting you.
Fantastic. So, definitely when you hear Sukuk, it's mostly on the federal side of things. And, it makes you wonder, why are the states, the subnationals, why are the local governments not exploring sukuk offerings instead of borrowing? We've seen some states now having huge debt obligations right now in the country.
Thank you very much. So I would say that actually states have been utilizing sukuk instruments to actually finance some infrastructure projects. However, you've not seen them on the public side as you've been seeing the one of the federal government. The closest everybody will know about is the one by Osun State in 2013, and that was the first sukuk that was issued in Nigeria, and they used to build a lot of schools and the like. But we've seen states like Katsina State, Gombe State, Sokoto State actually issue private sukuk, to finance some infrastructure projects in their states. But what we're about to see, which is going to change the dynamics, is the new ISA, that's the Investment and Securities Act, which has given local governments explicit authority to actually issue municipal bonds and sukuk. And we're going to see that impacting on development at the local government levels in the near future.
Right. So let's imagine a time where we have, the federal government and the subnationals, local governments, all using sukuk at the same time.
Yeah.
Are there any risks to that? And does that mean humongous development?
I think the benefits, the benefit is like going to be the huge leap in infrastructure development we're going to see if we have all the 3 tiers of government actually issuing sukuk. However, there will be a lot of guidance and rail guards to ensure that they are not abused. A key part of any sukuk issuance is the role of the advisory committee of experts. These are gentlemen and ladies that are actually steeped and well knowledgeable in Sharia. So they are there to ensure that whatever is stated will be financed by the sukuk is actually done. They will give a rating, a fatwa, and if there's a deviation from such projects, they will withdraw their approval for such. So that's where you see transactions like the federal government sukuk of Nigeria, the one that have been issued for the roads in the last couple of years. You actually see the roads being built. When you move from one place to the other across the 6 geopolitical zones, you see funded by sukuk 1, by sukuk 2, and the like. That shows that impact is being made, because you actually get this done. And we expect that will translate when you have the subnationals being more impactful in issuing sukuk. They will still follow all the processes because the ACE will not allow them to, to just short-circuit any of the processes. So they follow all the processes as if it's the federal government that's issuing the sukuk. So investors will be protected. There'll be a lot of infrastructure development, and there'll also be opportunities for investors to participate, and invest their money. Right,
and most of the time there's that narrative about, government crowding out the private sector. Do you think the tiers of governments will crowd out each other if they all tap the market?
Well, I do not think so. I mean, we have to realize that in the last couple of months, we've seen increased autonomy being given to local governments, and that means if you have a strong capacity, a strong leader in any of these local government, there is opportunity for them to actually develop their areas, local government areas, at a very fast pace. Nigeria is in need of humongous infra development over the next couple of years. I mean, billions of dollars. So we do not see in the near term the local government, the states, so much for them to do, in that space. And financing is key. A well-structured sukuk can actually help both the local government and the state in actually fast-tracking infra growth in their spaces.
Well, we definitely hear a lot of oversubscriptions, when it comes to federal government sukuk. Do you see the same investor sentiment, towards state and local government?
It may happen. It depends on how the sukuk is structured. If investors feel that the sukuk is structured in a way that assures them, of proper utilization and the money will come back, which it should. If investors feel that the state or the local government has the capacity to actually execute the project, and if we have the first 2, 3 issuances going on so well, and you're seeing the impact, then subsequently you can see a lot of oversubscriptions.
Even with the issues when it comes to, autonomy for local governments, do you think investors will be keen on, investing in such sukuks?
That is why the structure matters. That is why the capacity of the local government matters. That is why the leadership of the local government matters. People are not just going to come in because you're asking them to come and invest. They will look at you. Can you actually activate this sukuk the way it's been structured? Can you do what's been said? Do you have the capacity? If they see you as having capacity, yes, they will come around. You know, if you are rated, if you have proper guardrails, maybe you have a guarantee, then all of that will assist in ensuring that the sukuk gets subscribed and you being able to make the investment and infrastructure development you want.
Right, and you know, talking about in most of the oversubscriptions, you know, we've seen, you know, so far, and you know, gauging, you know, from where we started, you know, in 2017, you know, up till now, would you say the investment so far, you know, match somewhat the level of, you know, infrastructure development we see, you know, since when? Since 2017.
Absolutely, without a doubt. I mean, absolutely. That's why the FGN Sukuk issuances have been seen as the poster child, you know, for Islamic finance, not only in Nigeria, but outside of Nigeria on the continent. Investors have been able to see funds being raised, not only being raised, but being used for what they were meant to be used for. You know, so that has given people a lot of confidence. That's why you've had, the last one you had, it's oversubscribed like 7 times. You know, so investors are more confident, not only because the federal government's instrument, but because of the way they've utilized the previous issuances. So if the states and the local government start, and they start well, then in the near future we should see something similar as well.
So looking at regulation now, what challenges you think maybe the states, subnationals, and local governments could, you know, run into, you know, getting into this market?
So the ISA, the Investment and Securities Act, like I mentioned earlier, has now given local government explicit approval or guidance to actually utilize sukuk and municipal bond issuances as a whole to raise money. Now, the challenges will be how well are these local governments steeped, or how much do they understand, you know, as far as the law is concerned. They will need to get very, very good solicitors and lawyers to guide them through. They will need to ensure that whatever they are borrowing is captured under the proper act, either by the DMO or the state DMO, as the case may be. They will need to ensure that all the parties, they appoint professional parties. They do not try and cut corners when it comes to appointing people that will guide them in implementing this. So if they're able to do so, the parties, professionals will advise them on how to align with the law. They will file appropriate documents with the SEC, Securities and Exchange Commission, who will also guide them to ensure they don't flout the law. And they must also demonstrate that they have the capacity to actually monitor those projects. It's not going to be business as usual. This is you asking investors to come in and invest. Investors want their money back. It's not you saying, oh, I'm relying on allocation from government every month, come rain, come shine. No. Here, you must implement and you must show that funds are coming back. When you do that, investors will follow you as well.
Right, I'm talking about following. You know, there's that trust deficit, you know, between governments and the governed. And, you know, definitely when it comes to, you know, government spending, you know, taxation, it's always that issue, you know, right there. Do you think faith-based investment is what's going to save us?
It has shown, I mean, we've shown it with the FGN Sukuk over the last 6 issuances, you know, that maybe at the initial stage, people were skeptical, but Sukuk 2, Sukuk 3, Sukuk 6, we saw it being taken up by people of different faiths, Muslims, non-Muslims, you know. So investors now understand that this is just an alternative finance source, you know. And I think that when we get to the level of the subnationals as well, investors are already having experiences from the FGN side that this is not about Muslims alone, it's about an alternate finance source. So I don't see it impacting or seeing non-Muslims having issues with it. What they'll be more concerned about is which local government, which state is trying to raise these funds. How good are they? How reliable are they? Do they have the professionals? Do they have the capacity? You know, so that's what people will be more interested in, not whether it's a faith-based instrument or not a faith-based instrument.
Fantastic. And what are you seeing, you know, for the future of faith-based investment in the country?
I think there's a lot of opportunity for growth. You know, the last master plan of the capital market was targeting about 25% market share, you know, for faith-based instruments. We are yet to get there, you know, so there's still ample opportunities for growth. And I think Nigerians have realized that now, and we see growth coming in that space.
We see growth coming. Thank you so much. It was great having this conversation with you, Mr. Akeem Oyewale is the CEO of Marble Capital. It was great having your perspective, and I'm sure you're bullish
I am bullish.
on most of the investments
I am
coming
bullish.
up. Thank you so much.
Thanks so much.
Yeah. Obviously, cybercrime is no longer a distant threat. It's now a pressing economic and business risk for Nigeria. Recent reports show that organizations in the country are hit by more than 6,000 cyber attacks every week, placing Nigeria among the world's most vulnerable nations. Data breaches, crypto scams, AI-powered attacks are costing companies millions of naira and eroding consumer trust. Yet with Nigeria's cybersecurity market projected to grow from about $207 million in 2024 to more than $345 million by 2029. There are also opportunities for investment, innovation, and stronger regulation. Well, we'll explore the importance of cybersecurity for Nigerian businesses and the challenges they face and companies are facing, right now. Joining us for this conversation, we have Mr. Peter Ejiofor, the MD, Ethnos Cyber Limited. It's great to have you on the show, sir. Good morning.
Glad to be here. Thank you for having me.
Fantastic. So as a business now, you're not only worried about, getting customers, you're not just worried about investments, to expand your business. Now you're worried about securing that business, especially when you play a lot on the internet.
Yes.
So how are you seeing, when it comes to that cybersecurity market, what are you seeing when it comes to viable investments there?
Thank you again, Larry, for having me. It's viable to invest in if you're looking at it from investment. But again, is looking at the importance and the value of cybersecurity in the economy. Because actually, that's where the business is sitting on. If your business cannot guarantee trust to your customers, if you cannot tell your customers that the information you give to me is secured, or the money that I give to you is secured, or the investment that I put in you is secured, then there's a problem. So security has now become the backbone of the success of the business operations. So it's more of an enabler than just protecting the assets.
Right. And talking about protecting the assets, definitely we see financial services businesses are being attacked a lot because they're holding the money.
Yeah.
And these attackers want that money. So you did talk about, building that trust because as a bank customer, you don't want to hear that your money has been stolen because of a data breach and all of that. Do you think when it comes to financial services, are they spending enough on cybersecurity in your view? And are they spending it the right way? Are they going through the right channels?
I think that they are putting a lot of effort, quite frankly, because if you notice from the report, last year Nigeria was rated about number 35 or 34 amongst the most vulnerable countries. But this year it has dropped to number 5 amongst most vulnerable countries in Africa, which means that there's a measurable performance that has been reached within the Nigerian space. Okay. Now the investment, I don't have a lot of data that is being invested by organization. But I think that the regulatory framework from the CBN, okay, is driving things, making it much more stronger, and the banks are taking it also seriously. The financial services industry, to be honest, are taking security a lot seriously. But the attack space is expanding, okay? Because now we're opening more doors. We're licensing more fintechs. You have the e-commerce coming into the ecosystem, and then the bank capacity is also growing because now they are recapitalizing. So the more they increase, the greater the risk that they face, okay? And so you now find out that, okay, you now have Nigerian youths who are now restive and becoming more innovative. People are becoming more savvy, and that's also putting more pressure on the financial services industry to strengthen their resilience, to defend themselves and be able to prevent themselves from this attack. So they are spending more money, but the attack surface is growing, and so the risk is expanding, and they'll be required to spend more. And regulation is also driving that and helping that. And we are also building capacity. We are also investing in our own research and development so that we don't have to rely a lot on the foreign products. There's a number of Nigerian companies, including ours and others, are now building local capacity. We're knowing the market, we're knowing the company objectives, and we're building solutions to support them.
Because, it sounds quite tricky when you have to import the technology that's supposed to protect you as a business, it seems quite risky, don't you think?
Yeah, it is. It is financially risky because now companies are having to becoming more budget sensitive, and so we need to say cut down on cost. Exchange rate is rising, and so you're spending more money. So it's much more risky, and then of course.
But how are you sure that country or that business outside of your country that you're investing in to get cyber secure, how are you sure they're actually securing you?
First, they have to do business.
Right.
So it's up to us to evaluate them based on best practices to see that they are good enough. But I think that in terms of functionality, in terms of ease of use, we that understand the market, understand our culture. For example, right now, in my company, we are driving the concept of cyber hygiene and cyber discipline, okay? Which means we're saying to people to become more cyber hygiene. Pay attention to what you do, okay? Because people
when you say hygiene, it's not about washing my face. When it comes to cyber hygiene, just break it down for me.
In the digital space, I think we can use that analogy of washing your space. Okay. Now, if I were to cough here, I'm going to have to like close my mouth if I cough.
Right.
So that's a bit of hygiene. If I were to come in, use a restroom, I've got to wash my hands. That's a bit of hygiene. Now, things that our culture drive, and I tell people, listen, you need to apply discipline. For example, if I forward you a message on WhatsApp, all right, I don't know the source. I don't know what is the content, what is the embedded in that message. If I send it to you, I have spread worm potentially to you. And then if you push it out to another 30 people in your contact, you spread another worm to them. And that is part of the hygiene. And then what do you consume? You talk about fake news, for example. You're talking about propaganda, for example. Inside those things are embedded worms and malwares and viruses that are capable of stealing your data, which is why today some of you would know that suddenly you discover that people have even stolen your identity and they're using it to solicit for money from other people.
Right.
And then they are reaching out to people within your contact. How did they reach those people? You exposed those people to them. So if you breach that gap, you have helped to prevent that worm from spreading to other people.
Right. And I'm talking about, WhatsApp, there was a time I feel like I was always under attack. They kept on, they'll call me, they'll say, you're supposed to join a conference, at some
Someone
point.
has exposed you.
And we're going to send you a code now so that we can register you for the conference. And when the code comes in, I see it's from WhatsApp.
Exactly.
And they're trying to steal my, my WhatsApp. But those calls have reduced. Is it just me, or it's not working anymore?
Maybe they have moved to some other sectors of the market.
Oh, okay.
Because some people are getting to feel that some pressure.
Or are users smarter now?
I don't know. Now, the measurement of there's a reduction in exposure because now people are aware and people are becoming much more careful. But a lot of people still don't care. Today, within about 22 seconds, one identity is stolen. An identity is stolen within 22 seconds. So the speed at which data is being stolen, now data travels and a lot are being stolen, is on the rise. Okay? So there are people who are still facing the same incident that you're not facing. So it's growing to some other areas, it's dropping in some other areas, but it's critical because people are the doorway to organizations.
Or maybe because I have two-factor authentication.
Well, WhatsApp have built increased security. There's a lot more algorithms that is helping to reduce, which is why you can tell that this message is forwarded. Okay, before a few years ago you can't tell.
You see forwarded many times.
Yeah,
right.
They're improving their security, but we are not improving our own culture and attitude. They can control it.
All right, so going forward now, what would you like to see, when it comes to the government side and private sector side to actually push more investments into Nigeria's cybersecurity? Because at the end of the day, we don't want a continent that's reliant on importing technology, even to the future. What do you want to see?
I want to ask government to encourage local innovation and effort. Invest in SMEs. Okay, I don't know exactly how they're going to do it, but they need to invest in SMEs. I was looking at what drives the economy of certain countries, comparing Nigeria, Ghana, and Kenya. And I realized that services are one of the drivers of the Ghanaian economy. Nigeria is financial services. And these financial transactions, what are they producing? So agriculture, services, technology drives other countries' economy. So I think that Nigeria has to invest in local effort, reduce costs that we incur in research and development. I'll give you an example. We are researching to build applications, and it could take us 2 years to roll out an application. Within these 2 years, we were paying engineers. Do we get any subvention for this? Do we get any bonus for this? All right, we don't. So we have to dip into our savings and investment to finance this. Okay, are there research centers? Our educational sector, do they provide some research that we can take from and enhance on it? Currently, every resources we get them from abroad. So we are now saying we can't keep relying on foreign companies telling us what is happening in Nigeria. Let us build our Nigerian data. Let us track our traffic and use data that you can relate to it, you can connect with. That's what it costs money. So I will ask government, as much as they coming up with a plan, let them also commit to investing in education, investing in companies that are also making effort to research and innovate.
Right, so much investment. And
so much investment.
We have to start.
We have to start
at some point. Thank you so much, Mr. Peter Ejiofor, the Managing Director, Ethnos Cyber Limited. It was great having this conversation.
Thank you very much.
Thank you so much.
I appreciate the time. Thank you.
All right, let's get a check on what's playing out in the global space now. We see Apple Inc. Recently revealed the iPhone Air model and it's been delayed indefinitely in China, with local media reports attributing the delay to regulatory hurdles around the removal of physical SIM cards. Apple's Chinese website showed no clear pre-orders or release dates for the iPhone Air. Investor.com was also able to verify that. Other models from the recently launched iPhone 17 line showed pre-orders will open later, September 12th, beginning September 19th. So, still eyes on what's playing out there with the latest release there from Apple. All right, let's take it on to Europe now. See, German inflation, that increased to 2.1% in August, according to data confirmed by the Federal Statistics Office today. Consumer prices harmonized to compare with other European Union countries. That showed a rise from 1.8% year-on-year increase recorded in July. This latest inflation reading marks an uptick in price pressures for Europe's largest economy after previous months of the figures there. The UK economy, that flatlined in July, a substantial slowdown from the growth seen in the prior month, increasing the pressure on the Bank of England to continue easing monetary policy. Data released earlier today by the Office for National Statistics shows that UK gross domestic product was unchanged in July on a monthly basis, followed by expansion of 0.4% in June. Now we see gold prices in Asian trading today hovering just below record highs as signs of a cooling U.S. labor market that reinforced bets on a Federal Reserve rate cut next week, despite slight stronger inflation data. Spot gold, that was up about 0.5% to $3,652 per ounce, not far from the all-time high, about $3,673 per ounce touched earlier this week. U.S. gold futures expiring in December also climbed about 0.5% to $3,692 per ounce. And shares of Evergrande Property Services Group surged today after the company said he had received initial takeover interest, raising hopes of a potential change of control for the cash-strapped developers' property management arm. The company disclosed that the liquidators of China Evergrande Group, which controls a 51% stake in Evergrande Property, has been actively seeking buyers and entered confidentiality agreements with potential investors. Now we see Gemini Space Station Inc., a crypto platform. They've announced the pricing of its initial public offering of about 15.17 million shares of Class A common stock at $28 per share. The company and the selling, shareholders granted underwriters a 30-day option to purchase up to an additional 758,929 shares to cover the over allotments there. And the company's Class A common stock is expected to begin trading on the NASDAQ Global Select Market. That's today under the ticker symbol GEMI. The offering is expected to close on September 15th, 2025, subject to customary closing conditions. All right, let's get a check on live trading right here at the local bourse, and we're seeing a 0.11% rise right now. The markets are open right here in Nigeria, still holding on to the 140,000 level by 805 points, and we see the active trades. This morning we're getting tickers from the insurance sector. We're seeing tickers from banking there, getting attention from investors. The likes of Burger Paints, ICO Insurance, that's down right now. And definitely we see corn oil, CNI leasing on the flip side. That's in the green right now, but still very early trading right now. We'll give you an update on 1:30 in Business Incorporated on what's playing out for the intraday markets, even with the global markets that we track, how investors are trading the TGIF day right here. I'll be back again at 1:30. Thanks so much for watching. I'm Laddie Williams from here, the team right here at Channels HQ. Bye for now.